All right, welcome to The Explainer. Today, we're going to try and make sense of Bitcoin's next move by digging into both its historical patterns and what the charts are telling us right now. So, what is the deal with Bitcoin right now? You've probably felt it. The price has been all over the place, super choppy. It's tough to know what's coming next, right? Well, let's dive into the data and see what story it's telling us.
Okay, looking at the very near future, this week is shaping up to be pretty wild. Even though there's a US holiday on Monday, don't let that fool you. The rest of the week is loaded with key economic events that could really shake things up.
So, starting Tuesday, it's just one thing after another. We've got reports on manufacturing, job openings, jobless claims, and it all leads up to the big one on Friday, the main jobs report. You can think of these like checkups for the US economy, and you better believe that any surprises, good or bad, could send ripples through all the markets. And yeah, that definitely includes crypto. All right, let's zoom out from the day-to-day noise and look at the bigger picture, the historical trends. And this is where we start to build a case for being a little bit cautious. See, when it comes to Bitcoin, the month of September has a certain reputation. Yeah, the data is pretty blunt about this. Historically speaking, September is just not the most bullish month for crypto. It's kind of known for being a bit of a downer. And here's the proof right here. When you look at the average monthly performance over the last 10 years, you see this pattern just jump out at you. August is kind of meh, maybe slightly up, but then you hit September and bam, it's consistently the standout, but for all the wrong reasons. It's, on average, a losing month for Bitcoin. You know, there's that old saying, wake me up when September ends. And for Bitcoin traders, there's actually some truth to it. This historical data really sets the stage. It suggests we could be in for a month of just sideways chop, or maybe even a drift downwards, a time for the market to catch its breath. But here's where it gets really interesting. The story absolutely does not end with a gloomy September. Because right on the heels of this historically weak month comes what is often a super powerful season for Bitcoin, the final quarter of the year. I mean, look at this contrast. It's like night and day. September is where history tells us to be cautious. But October? That's when things often flip completely. The data shows it's frequently Bitcoin's single best performing month of the entire year. It's a total vibe shift in the market. And this isn't just an October thing either. We're talking about the whole fourth quarter, October, November, and December. This whole period has a really strong track record of positive returns. It's the part of the year a lot of bulls get excited about. Okay, so we've got the seasonal playbook, right? September's weak, Q4's strong. But what are the charts themselves telling us right this second? To get that perspective, we're going to turn to a classic technical tool called Elliott Wave theory. So what exactly is Elliott Wave theory? Don't worry, we won't get too technical. Think of it as a way to map out the market psychology. The basic idea is that crowds move in predictable, repeating patterns. You get these strong, energetic moves called impulse waves, and then you get these messy, choppy, sideways periods called corrective waves. The key is figuring out which one you're in. And wouldn't you know it? Right now, the Elliott Wave analysis is saying that Bitcoin is stuck smack in the middle of one of those corrective phases. This lines up perfectly with that historical caution we talked about for September. The charts are basically saying, hey, we might get a little bounce here and there, but the bigger corrective pressure might not be done yet. So, if we're stuck in this correction, what are we supposed to look for to tell us it's over? Well, the analysis points to two key signals. First, you need to see a powerful, decisive five-wave push to the upside. And second, that move has to smash through some key price ceilings or resistance levels. As of right now, we haven't really seen either of those things happen. All right, theory is great, but let's talk actual numbers. Let's get specific and pinpoint the exact price levels you're going to want to keep an eye on. Okay, the first really big level of support that analysts are watching is right around $56,500. Why there? Because it's a spot where a bunch of technical tools all line up, things like Fibonacci levels and the market's previous structure. It's seen as a potentially strong floor. Now, besides that major zone, there are a couple of other levels to watch. There's from minor support a little higher up around 57,360. The real line in the sand, though, is the previous low down around 55,000. Now, on the flip side, if we do get a bounce, the first big test, the first ceiling we need to break is that zone between $60,000 and $62,000. Okay, let's put it all together. What's the big takeaway? It's pretty cool, actually. Both the historical data and the current chart analysis are telling a very similar story. They're both saying, hey, maybe be a little cautious in the short term. But they also hint that this September slump could just be setting the stage for a really strong rally as we head toward the end of the year. And that, of course, leaves us with the million-dollar question. We've got these really powerful historical patterns all pointing towards a strong finish to the year for Bitcoin. But every year is different, right? So will history repeat itself once again, or is there something about today's market that's going to make this year the exception? And that wraps up our explainer for today. For more insights like this, head over to www.multigan.in. And hey, while you're at it, please like and subscribe to the Multigan YouTube channel. Thanks for watching.